Hey, how's it going, everybody? Thanks to those who joined us for the morning call this morning. Chris and I are just going to knock out a brief video for y'all, going back through economic calendar, DXY, and the indices. We had a bit of recording trouble as we're switching over to recording inside our Discord instead of using Google Meet or Zoom like we used to. So we're still figuring a couple things out, but bear with us as we take some time to do that. We're going to run through economic calendar, DXY, and indices just so you're ready for the week. All right, go ahead, Carson.
Alrighty. It's alright. A little speed bump, but nothing too bad. We got everything situated, so hopefully going forward we will be able to accommodate for that recording. Apologies, just a couple growing pains. So I will go ahead and share my screen with regards to the economic calendar. Henry, can you see my screen?
Yes, you are. Good. Just let me blow it up here. There we go.
Alrighty. So for this week, last week we had NFP and Powell testifying both on Wednesday and Thursday. This week we've got a pretty insightful week. On Monday there is no news. On Tuesday we do at 8:30 a.m. have CPI both monthly and yearly releasing, so keep that in mind. And at 1 o'clock on the PM session you do have a 10-year bond auction, excuse me. And then on Wednesday you have again at 1 p.m. you have a 30-year bond auction as well. And then on Thursday, all at 8:30, you have core PPIs monthly, core retail sales monthly, regular PPI monthly, and regular retail sales monthly, as well as unemployment claims. All five events being released at 8:30 a.m. And then on Friday at 8:30 a.m., you have an Empire State Manufacturing Index. At 9:15, you have industrial production month on month. And then at 10 a.m., you have preliminary consumer sentiment also. So keep that in mind. Obviously, we do not want to be trading ahead of CPI on Tuesday, so that's the big spotlight of the week. Make sure that you're not in any trades leading up to that. Let 15 minutes prior and 15 minutes post that news event release, let that stuff kind of shake out and then do what you need to do. Aside from that, that is really it for the most part of this week with regards to news. I will go ahead and get into the dollar. Henry, is my screen good?
Yes.
Alrighty, so with regards to the dollar, if you tuned into the midweek review, you noted that we were potentially looking to see price drop back into the equilibrium from this low to this high. We have the equilibrium here in and around that 102,750 level, 102 flat, excuse me, 102,750, 102,800. And from there, we were looking to see, do we draw back into the equilibrium, deliver into a discount, and then from there, if we want to go lower, we could potentially look for the weekly BISI. So we did reach into the equilibrium on the weekly. You can see there we did close back below the equilibrium on the weekly. So I would be looking for price to continue on the downside into this weekly BISI in here. That would be my next target on dollar. On the daily, it really tells the story. You can tell that we were waiting for displacement in one direction. We weren't really sure up here what dollar wanted to do. That's okay. We wait, we watch, and price will tell us what it wants to do. From that moving forward, you can see we created displacement to the downside. So that's going to show me the direction in which order flow is wanting to follow. We have two SIBIs here that we're looking at, and you can see that this higher SIBI matches with two previous week's lows. So I'm looking to see if price wants to push into any of the two SIBIs. Do we want to use that as resistance and go lower? And then create new displacement in any of the two directions, or lower, excuse me. So if we go in there and we use it as resistance, do we continue to displace lower? And then with that being said, if we don't, do we displace higher through them, and do we start to invalidate them and use them as support, right? But for my take, I'm expecting dollar to continue lower because of the order flow that was shown towards the tail end of last week. We created two SIBIs, so I'm going into this week with the expectation that we utilize those as resistance and we continue to move lower into this weekly BISI down in here. You can see that we did now fill this liquidity void as well, and price also closed below the equilibrium of this. So although we did deliver into a discount, we did not close back above the discount, but you do want to keep in mind that we are trading in a discount prior to this parent price swing. So keep that in mind going forward. But for the most part, going into this week, I am relatively bearish on dollar with the idea that we can continue to deliver lower into this weekly BISI. And with that being said, what will get us there is utilizing the narrative of the daily candle closures, how we trade in and around these two daily SIBIs and these previous week's lows. As long as we remain closure below these two things, I believe that we can continue going lower. If we start to show displacement to the upside and invalidate these two areas, then I could potentially start to see price trade back higher into the daily highs in here and around 105 flat. Other than that, that's about it for me.
All right. I will jump into indices real quick. Okay, so just taking a look at ES and NASDAQ, both on the monthly chart, you can see we've had nothing but bullish order flow since November of 2023. Just continuing to work higher, closing over prior highs, creating BISIs on the way up, here on ES, here on NASDAQ, another in here, and here as well. And as we continue to gravitate higher, we just want to note the inefficiency that now exists below. So I'm going to go into these one by one just to take a look. But ES here, you can note that it's not a fair value gap yet because we need this candle to close, but you do have inefficiency that's being established here in the form of a buy side imbalance, and we have sell side inefficiency. Not a fair value gap yet, but we are imbalanced to the buy side. And so if we are to see a retracement going into the later part of March or into April or May, this is the area that can be returned into. And so you'll want to note the current low of March because that represents the high of this inefficiency. And so if we're going to trade back down into some form of sell side liquidity, it would be there. Okay, so I'm going to drop that down like that, and then we'll go down into the weekly chart. And you can see here that area is inefficiency from the monthly chart, and then sell side liquidity below the lows down here. We're continuing to utilize this down close candle here as the bullish order block on the weekly chart. So as long as we show respect for that on a weekly closing basis, meaning that price is closing anywhere at or above the mean threshold of it, which is right here. If you take your fib from the high to low, you find the mean threshold. As long as we're closing at or above that mean threshold, we can continue to expect higher prices. If we close below it, then we can start gravitating down toward this swing low and this low here, and we have inefficiencies lower on the monthly perspective. Okay, but in terms of looking at the higher time frame order flow right now, we still have to remain with a overall bullish bias from the weekly and monthly perspectives, just given the fact that we are still showing respect for discount arrays. Okay, as we drop into the daily chart, you can see now how we have this inefficiency being established on the monthly, and we have sell side liquidity below these relative equal lows. So now what I'm watching for is price going to respect this BISI here as a discount array? If it respects it, then we can continue trading higher back up toward the highs. If we close back below it, then the likelihood is that we'll begin gravitating back toward prior day lows and these relative equal lows being sell side liquidity down here. It makes sense to have a retracement back into this area, given the fact that we do have inefficiency there from a monthly perspective. And if you're looking at price action since February, we really haven't had any external sell side liquidity run. So we made a low down here, we ran the buy side again, traded back into the range, but left the lows intact. And then here we traded down again, leaving lows intact, again, leaving the lows intact, and again here, leaving the lows intact. Okay, so not purging any sort of external sell side liquidity. It makes sense now at this point to have a return into some form of inefficiency. Here we have that area on the monthly chart, and you have those relative equal lows down here. So I want to see as we get into the week, do we show respect for this BISI being the discount array? If so, we can continue trading higher. But if we close back below it, then we can gravitate down towards sell side liquidity here. Okay, and again, the higher time frame basis still needs to be based off of those higher time frames. So here is your weekly order block, and as long as price is showing respect for that mean threshold, which is here, we can continue trading higher. So even if price were to drop down into sell side liquidity here, we could still operate with the expectation that we'd want to see price go higher from there until we see weekly closure back below the mean threshold. Okay, so we can be open to a short-term price move on the daily perspective back into sell side liquidity if this discount rate isn't being respected. But even after that is to occur, if it's so, we still have to operate from that bullish weekly perspective, okay, until you get closure back below mean threshold. NASDAQ, same idea here. We have inefficiency being created on the monthly chart, which I'm marked there in red. As you drop to the weekly chart, you can see how we have been respecting the mean threshold of this down close candle, the bullish order block right here, right there, and right there. just tapping into the mean threshold and then trading higher back up into the buy side here. Okay. As long as we continue to respect the mean threshold of that, meaning we don't see weekly closure back below it, then we can continue gravitating toward higher prices. So even if on the daily chart we have a short-term price move lower, as long as we respect that mean threshold, we can continue gravitating higher. Okay. On the daily chart here, you can see that we already closed back below that inefficiency, which ES closed at the high end, NASDAQ closed back below it. So ES has been a bit more bullish here in the recent couple of weeks than NASDAQ has. NASDAQ can now begin reaching toward prior lows down here. Okay, so I'd look for NASDAQ to reach back toward this prior daily low, and then you have sell side liquidity in the relative equal lows down here, making the high end of that inefficiency on the monthly chart. Okay. So once again, if we are to gravitate back down into sell side, you still need to watch that mean threshold from a weekly perspective. And if we close above it, we can continue to gravitate back toward higher prices and back into a premium of whatever dealing range is established here. Carson, any thoughts on indices here?
Nope, I'm all good there. Just note that as we start to get ahead of, we're going into a potential new quarter in the coming weeks. So we will potentially see a quarterly shift in the near future. Just don't call a top. And price will clearly show us what it wants to do, not only with regards to the way that the DXY is trading, but also odds are when you get those quarterly shifts, there is some form of higher time frame SMT. So until we see that, until that's very clear on top of the DXY, really no reason to, completely try to shift your bias. Continue with that higher time frame bullish bias. Just understand where those short to intermediate time frame retracements can unfold and where that internal sell side liquidity resides. Other than that, that's it for me.
Okay, nice. One last thing to note is that the current monthly contract, which is NQH 2024 and ESH 2024, is set to expire on Friday, March 15th. And so you can look at the CME website this week and see when the trading volume has become greater on the next contract, which is ESM. I believe. Yeah, ESM 2024 and NQM 2024. That is the June expiration contract. And once you see that trading volume is higher on that contract, you can go ahead and switch over to utilizing that one instead of ESH and NQH. Okay. That should be it for today. Again, thanks for bearing with us as we make this transition to recording inside of Discord. We're figuring out a couple things with the computers, and it should be good soon. We're excited to have some more opportunities in terms of the streams and the content that we can put out for y'all. So, yeah, looking forward to it. Any last thoughts, Harrison?
I'm good. Have a great week. Be safe.
All right. Be safe. Take care. Be responsible. We'll see you in the Discord.